Yeah, what does it mean for the dots inside of RTAs? So really good question by Richard this morning. It seems like he's a bit of a seasoned vet at this point, 3 years, about the same as me, to be honest. So well done, Richard. Welcome to the fam, baby. So yeah, again, this is something where I think I'll use trip as an example because it's got three dots on within RTAs. Three bullets really help guide the execution. And Keith just only gives himself really three dots in order to convey and get the execution right. So really, Richard, please don't take this the wrong way, but I think you may be overthinking the three dots and what they mean and the definition and that kind of thing. It's purely a timing situation, and the fact that Keith caps himself at only being able to signal the trade 3 different times to subscribers. So he really focuses very, very hard on getting the timing right for all of us within the RTA product. So again, if you don't mind pulling up the chart there, Marina, yeah, perfect. So the example is trip on the board, and so just again, just as an example, I think that first dot, right, the first dot short. Came right in here on I think it was the 5th. So you got one dot, first dot right there, second dot in here. The thing to notice is that he held off from, I think it was the 12th. Yes, he did the 5th and the 11th. Then he held off almost like 4 weeks until February 8th. To signal that last dot, like basically his last opportunity to kind of get it right, and really it was relatively spot on, obviously, right, with this decline here the last couple days, but obviously we've had to weather this up move, and but the thing is that the RTAs that would be incrementally adding. So with a short. You max on this is an individual ticker and trip, right? So you'd be kind of max sizing about 1% on the short side, maybe 1.5. But it's got relatively decent realized volatility here in the kind of 40, 50, RV range. So I really wouldn't even size it at 150 basis points in the portfolio. I'd probably keep that thing closer to like 75, right? 75 to 80 basis points in terms of your max sizing. So here you'd be adding, if that's the case, right? Let's just use round number sake for 80 bips. So each of these dots, you could add basically 25 to 30 basis, call it 25 basis points. I guess for round number sake, let's just keep it at 75. So you'd be like, somewhere between this dot and that dot, you would have been adding kind of, 0.05 at a time, right? And doing that 3 to 4 times, like times 4, call it, right? That would get you to 20 bips. And then, you would do the same thing here, right? Over the course of, a couple days, you can kind of keep adding to it, right? If it keeps going against you. Just because something gets put on in RTAs or you put it into your portfolio, really the kind of key rule here is to get to the min sizing. But after that, doesn't mean you have to take it to your max, especially if you're seeing the realized volatility, drop from kind of this range here, right? And take a big on this up move, right? On this up move up here, you saw a down move in RV and realized volatility. So again, like when you're seeing these kind of combinations, and then especially back up here, you saw big increases in volume, on a couple of these up moves, right? On this one and that one. So I think this is you combine the price volume volatility thing, and RV is not the vol of trip. Just I want to be clear here. This is just a very simple example and representation of volatility of that underlying piece of inventory. That's very easy to access for at home, which is why I used it as an example last week. And I think it's an easy, relatively, again, it's like nothing's easy. It's not simple. It's all about the particulars. And the VASP signal represents the actual vol that Keith has calculated in his signaling process. So that's going to look a lot, potentially, different than the realized volatility here. But again, my point is you had kind of a downshift, so you might have held off on adding to it until you really saw some kind of, in this case, what you had, you had up volume on this big down move here. So you had up volume, right, and right here. So that's a good key signal. And then you saw it bounce a little bit, and then you saw the volatility kind of pick up in the last couple days. And that's, again, that would be green light. I'm pretty sure that's what Keith saw. And the vol signal went up to the top of his risk range, and he said, let's snipe that bad boy and really try to get this thing back on track. So again, I mean, hopefully with the position sizing component, I understand this has moved against us, right? And it's off about 12% at this point, which is a sizable move. But hopefully, if you're kind of executing and not trying to go max, right out of the gate, or as things move against you, and really as something moves against you post an RTA, keep that in mind too. In RTA, he's trying to get the execution and timing right. So that means it's kind of like right, top of the risk range. So if it doesn't kind of work sort of for the following day or a couple days, then really sort of like reassess, right? And kind of just kind of reassess, what does this look like? How does a signal, what is the signal looking like? A trip is inside of your investing ideas as well. So you get the trend risk ranges. This week, the top end of the risk range was 2484 to 2007. So 2484. So that was basically right in here, right? That was kind of the top end of the risk range. And the low end, though, is still all the way down, what did I say, 2007. So call it right down in here. So that's still got a lot of down move, right? And 2007, low end of the risk range, is below this second dot. So I know now this board looks a little wonky, but my point is like that's below, the trend level is below where we executed that second dot. So again, the probability from a math standpoint is that it's probable, there's potential that we get back down to the low end of the risk range. And if this price starts moving lower, right, starts moving down this way, this low end of the risk range, especially with increased, if volatility of the vol, that underlying inventory starts to move higher, this low end of the risk range is going to keep dropping. It's going to keep going week by week, right? So again, these are all things that you kind of can piece together. Back on what I said that was the 11th. So let's go to the 11th. We'll go January 22nd. So this would have been a couple days after the second dot. Trip had put in from a trend range, a higher low and a big higher high at 2343. So that was again on January 22nd. So kind of right in this range here. After that second dot, it's price kept moving higher. That top end of the risk range, what did I say it was? 24 or something? 20. 2343. So it's, it was kind of up in this range up here where that check mark is. So again, you kind of combine those things, a big higher high really kind of means lay off it. And certainly wait for it to probe to that top end of the range before kind of executing some more. But hopefully that helps in terms of 3-dot rules. I took that as an opportunity to coach a little bit beyond just 3 dots. But the dots are really just a timing situation, just to reiterate that piece.